The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone. How's everyone doing today? Hello Ash. How are you? Windsor, how are you? Steve Neal, Scott, Richard, Ron, Scott Pickering, familiar handle. Patrick Humes, how are you? Just going through some different people. Hello Melinda. Hello Michael. Okay everyone. Good. Thank you. Thank you. All right, first of all, let's give a big awe for Blake. He was short too many S&Ps yesterday during this decline. Anyone feel sorry for him? I want to teach you something here that you can use for targets, for signals. Everyone see today's low? I show 243.10. Everyone see that? Okay, I'm going to my weekly. So we don't do a lot of teaching in here, mainly trading, but it's a two-close reversal, simple thing that I've taught. So I go back 2 weeks. Everyone see that? Look at what the close was. 24.31.10 to the pip. So if you were short, that's the off number that it has to hold to not give a 2-week reversal signal. And you could have used that off number to cover your shorts, to buy it. You could use this on any instrument. Give me a Y if you understand it. Give me a double Y if you've been using it since I've been teaching it over the last several years. But that's a good number every week. You just go to your weeklies and you count back 2 weeks, and that's your off number that comes into play many times. Okay? So put that tool in your tool chest, your trader's tool chest. So if the S&Ps are really going to turn bad, they have to close under 24.31.10 by Friday. Everyone with me? Sure. So Ishan, all you do is you count back 2 candles on your weekly, which on the S&Ps is this candle right here. It closed at 24.31.10. And then let me go to a shorter term chart. Here's the hourly. Here's the low of the break. This candle, 24.34.10. Is that a coincidence? I don't think it is. You get it now? Isan Goren? Okay, try it out. Check it out. You know, every weekend, write down a 2-week close reversal number and see how many times they end up being pretty good numbers. So call me Freebie Dale, trying to teach you guys something that you could use the rest of your trading career when I'm retired on an island and not interacting with the public anymore.
A Greek island. I hope you mean.
What's that?
I hope you mean a Greek island, Dale.
I hear they're beautiful, so it's one of the potential choices. So, how are you today, Steve?
I'm good. I'm good, mate. Good morning.
Okay.
Good morning to all.
Good morning. Good morning to you. Just looking at the majors, Euro's still not doing anything right, as far as I can see. So if we get that close under 111, perhaps we'll see some acceleration. So pretty good support here. It's just oversold. You know, I know if you took the third drive up here, nice trade, even if you book half, should have booked half even the first day, but I still remain constructive. Pounds turning around. I don't know if that's the bottom. I don't know what you think, Steve, but
it can be. We're going to show the chart later, although I'm pretty sure that Blake is, since he's going to be first, he's going to go over it as well.
okay.
But once again, this is a reaction coming from
From the Queen. The Queen?
no, from a comment.
Andy Haldane, yeah.
Yeah, Andy Haldane, he's the main economist of the Bank of England, who made clearly a very hawkish statement. You remember Stelios has been saying it as well, and we've had that discussion some time ago that had to do with that, it makes sense that the MPC vote seems to be shifting because simply their main mandate is about inflation, and inflation in the UK is almost at 3%, and the evidence is that it's actually growing instead of easing. So, sooner or later they are mandated to do something about it. So Haldane more or less photographed that, and he mentioned, Stelio, you want to say what he mentioned exactly?
Well, EG looks like it could pull back to 86.50 or so, another 100 pips. This could be a failing rally in EG, so that would make the euro my preferred short over cable now, especially with what happened in cable. I mean, it's trying to diverge. Maybe this is two drives, but euro still looks like the preferred short.
Or they'll simply, this might just be the case of an impulsive move higher, which should find at least a three-wave correction lower, right? So if that's the case, and we don't see some other kind of a more complex correction, very simply we might register, incrementally a lower low, because this high that we got today is quite close to the previous high that we got on the 12th of June, whatever it was, at my birthday actually. So we might see a move roughly down to 87. I mean, that's the simplest corrective count that we might see before higher, if we don't get something more complex.
And we talked earlier in the week, I thought that we could get a rally in Canada, USD CAD, put in a higher low, that perhaps we get a rally to 3.5. Could abort at any time, but this looks like it's going to be presenting a shorting opportunity between here and 350, and I don't think we should close back over 34. Something else is going on in USD CAD.
Agreed, but the risk reward currently is to be long, and I'm saying that although I was bearish CAD since the top, if you remember, we had taken that short here on the show. But keep in mind, because I do believe in some of that I know that some of the candlestick patterns are quite potent in indicating highs and lows. You remember I said yesterday during the show that what we had at the moment, and actually that got verified at the close of the day, was a morning star formation. So, as you said, from a basic technical perspective, yes, we can easily see a rejection from 134, and as long as we remain below it, there is nothing bullish to see. But looking at the chart on the shorter term, this daily morning star formation definitely takes off the bearish wind. You know what I mean?
I was looking at some longer term charts in Aussie yen, and we could get one more blast, especially if the S&Ps, that was just a one-day event and we blow to new highs into next week. But I'm leaning towards selling a fib retracement of this initial wave down. And the reason is the longer term charts. You look at the daily, we never got back. The breakdown was 85.80. This still could be some type of ABC. I mean, you're wrong over 86. The weeklies really showing a disconnect from, like many things in with the S&Ps, but you can see we held this 200 right here, down here, and this to me looks like it could just end up being a failing rally and eventually take out 82 and head back down to 78.
Actually, what you're showing there is the 50 moving
That's
average.
That's a 50.
Yes,
The
but
200 above it.
but it is an important moving average for the weekly chart because roughly 50 weeks, 52 to be exact, is a year.
Yeah. Year.
So what
Yeah.
you're showing there is more or less a yearly average, which is quite important. And you can see, if you notice how it moves back, you can see that it indicates where the trend is. I mean, for example, at the move lower, look for how many weeks the 50
Good
moving
point.
average actually capped price
Yeah.
action, indicating that the price action is bearish.
Good eye.
And now we've broken above it. As you see,
Right.
we've retested it 1, 2, 3, 4 weeks. Every single time it actually managed to hold price action.
I'm not impressed with the bounce. That's probably, I'm not, that's really the point to me is maybe we're halfway back from the decline at 88. So far not impressed with the bounce with
I'm
as
not
strong as
impressed
risk
with the
has
bounce
been.
either, but on the other hand, I cannot ignore the fact that
So you'd wait for it to take out the lows
I'll
to
tell
know
you,
that you had another wave to the downside.
if I had to make a decision now, if I want to buy or sell at this moment to hold Aussie yen, I'd probably buy it. I would rather have no position at all, let me be clear, right? But
Okay.
if you
All
see
right.
you can draw a channel, do you see all this bearish price action?
Why don't you put it, go ahead, let's see your beautiful technical work.
I'll tell
You're
you.
kind of like
Blake.
Steve Rembrandt.
Yeah.
No,
Oh,
good
Blake,
news is
yeah.
Steve likes he loves to talk, so I'm just kind of letting him go. Just he's like a little wind-up toy. He hasn't stopped yet. Stelios knows what I'm talking about.
So Blake, I know that.
I appreciate his verbosity.
No, it's great. It's great.
Blake, I know that at the bottom of the hour you have to go, so take over.
How about I'll let you continue that in a few minutes, and let me really quick just cover a couple of things that I see, and one of them being the euro dollar. So the euro dollar, and I just sent this out to ForexAnalytix subscribers too. You know, we held this 38% retracement right here, and you know, I was expecting a move. Well, not expecting. Let me rephrase that. I was really hoping for a move down through this support, through the 38% retracement, to get a little bit more of a dollar bounce. And that doesn't mean we still won't get it. I'm just saying that I was really expecting this like right now. I was hoping to be buying the euro dollar in the 110s, not sitting here looking at it at 111.50, close to a breaking out. See, the problem is that we held the 38% retracement on the euro. So if you look at a little bit longer term, and I'm going to have to kind of delete some of this. Let me delete some of this stuff just really quick. This move here out of the euro dollar is holding a 38% retracement following the French elections, and we're not breaking down. The longer that we hold up here, the more at risk we are for a continuation move higher. And so I'm now on the lookout for a possible break higher of the euro dollar. We start breaking through like 111.50, 111.60. I'm going to have to start getting long the euro and in anticipation of a move back up to 113 and maybe even higher. So the risk reward, you were talking about like the dollar risk reward at this point. Look, if the dollar is not going to break out to the upside, meaning the euro is not going to go down, then you can, you know, and I was reading this piece here. Let me pull up this. Let me pull up this report from UBS. Here you go. You want to, this is from UBS. Okay. This is last night. FX flows, euro dollar net sold all week long. Really? So the net selling via UBS all week long has been sold. Okay. So what if the euro dollar starts to rally here? Then you got all those people that are either short or have been selling that are like, oh shit, you know, we're at 112. I didn't think we were going to be back at 113 again. They're going to be forced back into the market. And I was reading all this last night, and I'm like, what? dude, this thing's not going down. And because of that, not just because of that, but just looking at structurally, I mean, you're sitting here at the 38% retracement. You're not breaking down. There's a good chance that we push back towards 113. The dollar is not as strong as you guys, or as I say you guys, as people think. You know, I look at the dollar index and we're right up against trendline resistance here. We've barely had a recovery off the 618. That doesn't mean that the dollar can't go higher, but now I have to be on the lookout for possible dollar weakness. You had mentioned, Dale, yesterday about the S&P. I was long, or excuse me, short more than I had anticipated. I actually got out last night, right as the S&P pits opened again. So they opened. This is a 5-minute chart. There's a 4-hour.
So that was
I got out
better than 10 handles.
Yeah, it was a nice trade. So I got out like right around here last night, not here. This is in European trade. I got out somewhere around here, like this 24.35 level, somewhere right around there. And you know what? It's interesting. The S&P, if you look at this trend line that we're respecting, okay, that's one. This is just an hourly chart. You can also see there's a 618 that we held. Okay, and that's actually from right here. We held a 618 retracement of the S&P. So we know where the line in the sand is for the S&P. It's really this, you know, at this point in time, it's this trend line. Okay, so, you know, this has got to hold on any move lower now. So, you know, you just start looking at that and go, okay, well, I know where to be long from. The problem that I see here is now if you let me take that away. This is a pretty big false breakout over here. That also it matches up with the 618 of a bounce, and since we're respecting the 618s, we might as well start looking at them again. So the euro or the S&P, if we get a bounce back to 1245, that's going to be a pretty good place, in my opinion, to be on the short side of the S&P again. All right, I don't know if we're going to get there or not, but that's what I'm looking for. That's what I'm looking for, the potential of a move up there.
Did you survive the long pound crosses? Because they're working now.
You know what? I didn't. I actually got out of them yesterday. I got out of them last night. So when I took the S&Ps off, maybe about an hour later, I took the pound New Zealand and pound Aussie off, and I took them off. This is an hourly chart, probably right around here. So no, actually probably right around 60. Yeah, I guess right around here. So I took the pound Aussie off, or took the pound New Zealand off. I took the pound Aussie off, like right around here as well. And I just took them off the table because I'm like, well, what if the pound, because the pound looked like such crap yesterday. Obviously you can't time these speakers. I mean, you know, the Bank of England, you have what's his name? Handline? Is that, say that correctly?
Haldane.
Go back here.
It's Haldane.
Haldane. That's right. Haldane. Haldane. You know, you can't anticipate that those comments are going to come out, especially against what, you know, Carney was saying. So, to answer your question, no, I didn't stick around, which is unfortunate. Because I know they're ripe to be bought. I just didn't want to stick with it just in case, because of, you know, I'm getting towards the end of the quarter. So, you know, for me, it's just kind of reducing risk at this point. But that, you know, that doesn't mean they can't go higher. That doesn't mean that I look at them and they still look very constructive. We do have the Bank of, or the RBNZ a little bit later today, and the Kiwi has been, you know, very resilient, and it's driven me quite crazy. It's been as resilient as it is. But the thing that we have to, you know, look at right now is what if the Kiwi breaks through 73 cents. 73 cents is a big deal for the Kiwi. This is you know, a big resistance up here on the, here, let's go over to like the daily.
It's like a big symmetrical.
Oh my gosh, it's a trend line of the triangle. I mean, we're right there. So you gotta, be a little careful, and I know the risks, and considering I had some, I have New Zealand short exposure through the Aussie New Zealand, I just had to reduce a little bit based on the sizes that I'm trading. So I just had to do that. I actually think the pound Aussie and pound New Zealand are still great longs. I just have to figure out when to get back into them. They're still on my radar to be on the long side. So anyway, that's what I'm thinking with that. And then so the S&P, I'm looking for possible rollover, but I need about another 5 S&P points higher than that. The Canadian's right up against resistance. We're right up against that 133 level. Pretty key resistance. There's crude oil has taken an absolute beating, and let me go to crude. We have crude oil inventories today as well. So if you look at crude's taken an absolute beating. We're near a lot of support where a lot of spike lows are at. There is a risk that crude puts in a false breakdown and rallies. Now that doesn't mean crude turns bullish all of a sudden, but what you'll notice here, and I'll highlight it with a pen, is we've got higher or lower highs, okay, and lower lows. Now what that also means is we could turn bullish for a couple of days or maybe a week, and then reverse up here, in the high 40s, and still be maintaining a downtrend, But do you see how crude is very, very guilty at this point in time of, getting traders short and then reversing, getting traders short and reversing? You know what I mean? It's got a history of that. So what's to say that crude won't bounce here? Especially after crude oil inventories, if crude strengthens, that's going to push that dollar Canadian down. With what I think is dollar weakness is coming in. I think is the play. So anyway, the dollar Canadian I think is up against some resistance, and what else? I think that's.
Luca's asking you about gold. It's right at the trend line. There's some intraday divergence. I know you're watching it.
Yeah, it's I think while it's above the 200-day, you can't really worry about gold too much. I bought a little bit this morning. I sold it last night, and then I rebought it again this morning. I'm underwater a couple of dollars, but it's really small. It's like I'm chipping away at it down here while we're above the 200-day moving average. I'm not really too terribly worried about it. One of the other things is I just, ForexAnalytix subscribers just received this chart. This is silver. Silver's in a descending wedge.
Freebie Blake.
Yep, it's a freebie Blake again. So we're just because I'm running out of things to talk about. That's why I'm going to turn Toy Story Steve on here in a minute. I'm going to wind him up and let him go. So
and today may be the moment of truth for the Aussie Kiwi trade, right?
Yeah, today would be. It will be. It's as long as it's above 104, I don't mind. As long as if it gets below 104,
as long as you don't call release the Kraken, I'm okay. You can say whatever you want.
All right. So, and it's more realistic than he believes, because as his son gets into the 2 to 3 ages, Toy Story is going to be a staple of his life for the next few years. So anyway, the silver has punched lower. RSI is very divergent here, so we got to be on the lookout for a possible reversal. So if gold does, firm up, the dollar pulls back, we could see silver and gold, ratchet higher. But before I get too aggressive in gold, I'd like to see silver start to make a turn. All right. Now, with that being said, I'm going to pass it back over to Toy Story Steve, and here you go, Steve. Coming back over to you. You guys have a great day. I've got to jump into the New York Open.
Thank you, Blake. Good luck being in the ring.
Thanks, guys. Thanks, guys. Have a good one.
Bye-bye, mate.
Bye-bye.
Thank you, Blake.
Thanks, Dale.
I don't know if... Okay, I'm showing the right screen.
You're up
Okay.
there.
Good, good, good,
Yeah.
good. Blake already showed silver. I share his view on this, and not only that, I have one more thing to add here. I also wrote it yesterday in the analysis. Do you remember, Dale, that together yesterday we made the ABC equality target?
Yes.
Look at it. We tagged
Yeah.
it to the pip today, literally to the pip.
What a coincidence.
So not only if you go to a 4 hour, you can clearly see, you can see it as here as well, but on a 4 hour, it's more clearly visible, a descending wedge. But if this was corrective, if it was an ABC, then now it's a perfect ABC, okay? So yes, this is a level that we could see a bounce from. I mean, this is a high probability, and it's also, the 78.6 is also around here. So if, for example, we start reversing from here, we will have never actually closed below the 78.6 on an intraday basis. So, a couple of resistances will have done the work here. The descending wedge as well adds value to it. But as always, everything starts from an interesting candle. So do we have the mix of ingredients that would make us interested at this point of time? Yes, we do. But one of them is missing. And it's the catalyst, as we say in chemistry. Okay, the trigger. And the trigger for me is always, a candlestick. So that's what I'm waiting to see here. Okay?
Yeah. I don't like that RSI reading in May. That's the one negative.
This one.
No, the low.
Yes, yes. It's a very low
Yeah,
RSI.
I mean, you made money scaling into it, but
yes, that's what I wanted to say.
That was an awful lot of momentum. What was the RSI, like 15 down there?
17, roughly.
Yeah.
Yeah,
Yeah.
which is extreme, obviously. There's no question about it.
Right.
You're absolutely right. I mean, is this thing bullish at the moment if you look at it in the medium term? No, it isn't. But the question is the following. Does that take away the possibility that we're just seeing some kind of a complex correction with strong moves in either side? No, which means that there might be a decent amount of money that can be made trading it both ways, right? But as I said, everything we explained today is a theory. This theory will come in action once we get a catalyst. The ingredients are there. What is the catalyst? Is an initial candlestick that we want to see. So for example, let's make an assumption. Let's say that the day reverses and we close as a hammer. So then you also have one more ingredient, and then you can say, okay, now I have enough things in place that in combination with the amazing risk reward, I'm going to make, an attempt to be long. If I get stopped, fine, because the risk reward is amazing. Because if I actually make it, then I might, make 5 times what I risked initially. So even if you fail a couple of times trying to pick tops and bottoms with these kind of favorable risk reward conditions, it's still worth it. It's still worth it.
I just want to bring up that happy summer, everybody.
Yeah,
let's have a great one.
Happy summer.
And also, Gann believed in the change of seasons were a time frame, and everyone knows Gann believed time was more important than price, and that there are potential reversal windows around the change of the seasons. So.
As in the vast majority of the cases, Gann was a firm believer that time is a major element. Other theories, like Fibonacci, for example, Fibonacci is an excellent example of a theory that simply believes in price movement. As almost always, both theories have merit, and usually what you'll see, not usually, always, what you're going to notice is that a combination of the two theories, so noticing when time seems to be more important or when price movement seems to be more important, is going to yield the best results for your trading tactics. So
some people use fibs on time.
Yes, yes, of course, and even TradingView has it.
Not just for price, but
Yes.
for time.
Yeah. Even TradingView has it. You can actually draw fibs through time. I want to be honest. I'm not counting time with fibs or whatever, but I'm noticing it. If you remember, we've very often had conversations about this seems to be correcting in time and not in price and things, expressions like that, right?
Yeah.
Yes.
So Luca's saying that Trump fired China yesterday. He was counting on them to clamp down on North Korea. Interesting, Luca. I didn't know that. I didn't see it, but thanks for bringing that to our attention.
That makes us too, actually. Actually, yesterday I was very busy, so I didn't notice that as well.
Yeah.
Luca, thank you for sharing.
Yeah, Luca's on it, man.
But by the way, Dale, because we orally said it before, so for example, what I mentioned here in Euro Pound, we might see something like this, right? Right? Boom, boom,
Yeah,
boom.
ABC.
Yeah. Likely, very likely. So, because this reversal, today's reversal as a candlestick, for the time being, of course, we need to see how the day is going to close, is quite powerful. And it comes again from the same zone of interest that we had, right?
That's why I'd rather, if I'm a dollar bull, I'd rather be short euro than pound right here because I think EG is going to pull back. That's part of my...
From what it looks like, in the short term, we should at least have one more pullback. I mean, I'm not trading it at the moment because, I see better opportunities out there, but, I would definitely be short and not long at current price, for sure. In the short term.
Roderick, I've seen fibs have a lot of relevance on trades. So, I guess that's a question of opinion. And I think Luca has a look. Maybe you want to show what Luca is
I'm
trying
going to
to
do it right now. I'm pulling out his link.
He's an excellent technician.
There we go. Let's see what...
Oh,
well, I
there it
greatly
is.
appreciate the efforts of President Xi and China to help with North Korea. It has not worked out. At least I know China tried. Yep.
Okay.
Yep. So in essence, he's saying I'm going to take matters.
Yeah.
On
it's
my
up to us.
Yeah.
Up to him. I mean.
And you know something, Dale. Even if we want to think, from a perspective.
It would take the heat off him. If,
exactly. That's what I wanted to say. Yeah. It's a great if he believes. Actually, he's not going to believe because he's definitely going to have some inside knowledge. So if he knows that, for example, the whole matter into the that has to do with the investigation into the Russian issues that he has with if he was in collaboration with the Russians pre-election period, etc., etc., etc. If he thinks that this is going to take, if this is going to blow out of proportion, or if it's actually going to start showing some evidence, that would be a great distraction for him. Great, just pulling the U.S. into some kind of a conflict, which definitely draws headlines, but on the other hand, it's not even dangerous for the U.S. because let's be honest. North Korea at the moment technologically can pose zero risk to the US. Zero.
Yeah, but they're talking about 1 million casualties, 1 million people casualties if they just let loose with their conventional weapons. They could take out, a lot of people. So
where? The question is where? Where can they take out a lot of people?
Seoul.
Sorry, where?
Seoul, South Korea.
Yeah, and do you really think that Trump cares? I'm very honest. I'm very blunt and honest here. And it doesn't have, this is not a comment against Trump. It's a general attitude of politicians, you know what I mean?
Yeah.
Do you think that necessarily Trump cares about that?
I have no idea what he thinks.
Me too. But do you think that necessarily he cares?
He probably would care what China and Russia thought about that.
That I can agree with.
as more than the South Korean people. But anyway, okay. So I'm being challenged by Roderick. Okay, Roderick, I accept your challenge. I'm going to look for a 61.8% retracement on Aussie yen of the recent break and try it there.
Yeah, yeah.
Okay.
I just saw his comments.
All right.
So,
I mean, what do you have to say about that, Steve? I mean, are all your fib levels, do you act on them? Or like Roderick's saying that they're all good in hindsight, you could say, yeah, look where it stopped, but you need more than a fib level just to execute.
absolutely.
Maybe an area to probe, and you don't know, you know, if it's going to be a 50% retrace, 61.8, 78.6. Some people have an idea. Certain instruments respond better to certain fibs. I know like Lydia and Pinkley is a big believer in 61.8 on cable. She's tested all the fibs out, so each instrument has their own personality. But
very true. And the other day, Nicola mentioned that Euro USD, the fiber, is very fond of the 78.6 retracement.
Yeah.
So that's actually true. But having to do with you know, if you act on just fibs, etc. From a personal perspective, I think people that have been on our webinar already know my method of functioning more or less, and it's as simple and it's the following. I never act unless I have a confluence of factors showing me that something is going to happen and a trigger. And most obviously, as anybody should do that, the risk reward, the reward to risk. Because if the reward to risk isn't there, even if you have everything else, you know, you shouldn't be doing anything.
So Luca's probing the long side of gold and shorting Kiwi yen here, Steve.
Look, I'm not doing that often, but let me show you a 4-hour chart, actually, of gold, now that he mentions it. This is what I see in gold. So the move lower is channeled, right? This channel support has held. This was the third, fourth time now. The price action for the time being, even on a 4-hour chart, yes, we're holding a horizontal zone here. It's obvious. But on the other hand, do you call this bullish? No, not yet. So I'm missing the trigger here. I mean, yes, do I see a channel holding? Yes. I even see a divergence starting to form on the 4-hour chart in the RSI. It's here, right? But I still don't see the catalyst that will tell me, okay, yes, this was it. It's A, B, C, a clear rejection or a clear, you know, thrust higher, and oh yes, yeah, now I like it. Now I want to be long. Not yet. I don't see it.
It's a decent shot. Where's your stop, Luca? Looks like a little 3 drive. What's the time frame? 4 hour?
This is a 4-hour chart that I'm showing at the moment.
Yeah. I mean, you know, sometimes you probe a trade, you don't bet you probe everything.
No.
So
I'm not against anybody. Yeah, I'm not against anybody to taking a long here, because Luca might have a completely different style that he has customized to his needs, and you know, every trader knows if the trading style they follow works for them. End of story. I mean, Luca might be taking premature for my taste positions, but he knows how to handle them, and he could be making, you know, very nice money out of it. I have no doubt.
Right.
For my taste, it's still premature. I mean, you know,
what would convince you? Back over 1248?
Yes.
Is that enough?
I don't know if it would be enough. It depends on how it happened.
Yeah.
But definitely, 1248 being breached is a bare minimum for me to consider it. You know what I mean?
Yeah, maybe 1255 is going to be more important to you.
Yeah, this zone actually, yes.
Okay. All right.
And it depends on the speed of how we do that. You know what I mean?
Yeah.
If we get,
good hunting on that.
Yeah, if we get here with this speed,
he's risking 12 and a quarter, so he knows what his risk is.
Yeah, that's
all right, which is the key.
Yeah, that's the key. Exactly.
All
exactly. Right. That's the key. No questions asked about it. So speaking of 4-hour charts,
I don't know if Nick is going to be here or not today.
yeah, I don't know
Veronica,
that either, to be honest.
I'm a fan. I don't see her, so I would say no. But you can see all her stuff on the ForexAnalytix website, all her harmonic work.
They asked, they actually forwarded the other day from our customer support department that one of our subscriber asked what was the logic of me pulling my Kiwi, taking profits on the Kiwi pattern in play. And Blake showed it before. I just wanted to go over it because I forgot to mention it on the webinar.
Oh yeah, I remember last week you tried it up there.
Yes.
You had it on up there before the Fed.
Yes, and I actually, exactly, I was short from literally almost the top, like 10 pips from the top, and I took profits somewhere here. And the reason is what you're seeing here, because from experience I can tell you that triangle formations are very rarely reversal formations, and usually
continuation.
Yes.
Yeah.
Yes. So even if Kiwi breaks down now, I have to tell you, because this is the way you should approach trading. You should approach trading with rules. So even if Kiwi breaks down now, I'm not going to be like, oh, what an idiot I was. You know, I was short from the top and I took profits. No, because it will still be a truth that triangle formations are statistically more probable to yield continuations. End of story. And I cannot ignore that as a fact. You know what I mean, Dale?
I sure do. And someone's asking about Euro Aussie. James says that we're breaking out here.
Let's see.
Go ahead, buddy.
No, go ahead.
I took my train down to Madden Road. Go ahead, man. I was going to do love potion number 9. Go ahead.
Let's see what he's
Oh, okay. It broke out of a...
Oh, yeah. I actually see what he's seeing. Oh, wait. First of all...
Falling wedge. Wedge.
Yes, exactly. I see what he's seeing, but I made the mistake of pulling the chart at the wrong place. That's why it doesn't have technical analysis on it.
Oh,
here we go.
Okay.
Okay. Yes, I see what he's seeing. And actually, in this case, first of all, look at, let me see. Look at where we found support at the 38.2 almost we tagged. It's also a previous high here, right? So I also see clean pattern down, and I think this is the time that we go back to the 4-hour chart, because I actually might take that trade now that he pinpointed it. I hadn't checked it today. But let's see if we actually have the ingredients we need here to take that trade. Let's see.
And guys, we have a great guest today, Joel Kruger. Anyone know?
Really? Joel's going to be here?
Kruger? Huh?
Joel is going to be here?
Yeah.
Nice. Oh, I'm, you know.
Are you a fan? Are you a fan?
Yeah, I like Joel's work a lot. He's a very... he's a very calm type of guy. He has rules. What I said before, he's a guy that follows his rules. He's monitoring moves and he likes to fade stupid market moves, and he does it very successfully. I'm actually a fan of his work, and I see the markets with the same set of eyes he does more often than not, I have to tell you. So yeah, this is what our friend is seeing here, as you see. And I'm with him. I like it. I like it. I want to see what it's going to do here, because if we take it at a short-term scale, this is what we're testing at the moment. You see it?
I do. I just want to make a statement, okay, to you, Hans, that we show respect for our guests, and if you don't have anything nice to say, don't say anything at all. We have an agreement in the room, because everyone's going to have, look, you'd be surprised. There are people that even say, I'm a bad trader. I know it's amazing or, everyone, right? We're all bad traders once in a while. Not all the time. Okay.
Oh, sorry, I don't
So that's a ground rule in here. If you don't have anything nice to say about a guest who's contributing his time to be here with us and try and teach us, that we don't say anything. It's called biting your tongue, or in this case, your fingers.
I think,
Go ahead, buddy.
I think he might have been joking because he has a smile at the end.
Oh, I see. Okay,
so
maybe.
I think he might have been joking. But anyhow, I can tell you one thing as a fact. I'm not a politically correct guy. Stelios and Blake can tell you that. I mean, I sound nice, etc. on the webinar, but I like to speak the truth always. And I wouldn't have said good words about Joel. I mean, I wouldn't have said anything, but I really believe that he knows his stuff. Okay. So even if that was not a funny comment, which I think it was, I think he was joking. I still wouldn't change what I said, and that in my opinion he's a good trader.
Okay.
And you know very well something as well, Dale. Somebody that has been on the markets for so long, they must be doing something right, because this game, this game in quotes game, of course, is gonna chew you up and spit you out in no time if you don't have what it takes, right?
Yep. Had my teeth kicked in. Okay, buddy. So yeah, that's a nice looking triangle there.
Yeah, this is actually
good eye.
Yes. So yeah, thank you for pinpointing it, because we were monitoring it, but I haven't.
And Greg, you remember about 2 weeks ago, Armand said we might pull back in Euro Aussie to put in a right shoulder. Didn't quite get that deep, but I know that I think we had a meeting, and Grega has a huge bullish long-term wave count in Euro Aussie. I mean, way up there.
So
maybe you want to be a freebie Steve on it and show us monthly on Euro Aussie or something. It's really
Greg is definitely coming within the week. Probably, I think he's coming probably tomorrow, actually. So I'm sure he's gonna share some freebie knowledge.
Yeah,
he will.
He's out buying me some shoes right now.
Here he is actually. Here is freebie.
Yes,
yeah, do you have my shoes, Greg?
Yes, I bought some shoes for my daughter. Yes.
Okay.
Did you buy the pink ones for me as I asked?
Friday, so we are still picking up some final stuff to get ready.
Nice.
Hey, buddy.
Hey,
you want to take over the screen? You have about 10 minutes before Joel is here.
There you go. I already gave it to you.
By the way, before you start, our friend Adi is asking if the interview is recorded. Yes, it is, and it's going to be on our YouTube website.
Yes, as always, interviews and the whole webinar are being posted a few hours after the event is over on our YouTube channel. And everything else we produce as ForexAnalytix, you'll find it there as well in categories, etc.
Okay, so last time when I was here, Steve, we discussed about dollar, as you know.
Yes, Greg, by the way, I still don't see your screen. I'm just telling you. Yeah, now we do. Now we do.
Okay, perfect. So if you recall, we were highlighting this ending diagonal for waves. It was same to the downside on dollar index. On dollar index, we also discovered that head and shoulders on a line chart. So we were looking for at least third leg of decline. Either is going to be wave 3 or wave C. And so far we have seen a very nice move to the downside. We have also reversed at the start of the week and tested this trend line, which turned to be a very nice resistance. So it looks like that we are now headed to the downside. What really matters to me on the short-term charts, since we are already reaching a new swing low here, so you never know where wave C will finish, but normally it will reach same distance compared to first leg. Okay, so it's very important when you are at the new swing low to focus on smaller time frame charts to see the structure when and be ready if market will maybe be ready for a new change in trend from bearish to bullish mode. So on a 30-minute chart, what I discovered is that the recent bounce was clearly in 3 waves. So this is probably the most important structure at this stage, which suggests that sooner or later these new lows will be seen. Why? Because recovery was made in 3 waves. We have seen a decline at the head of the US cash market open. It means the decline sent prices back into this area. So there is no way to count this in ongoing 5-wave movement. Okay, it was
Correct.
a 3-wave movement. So
because it
either
would be a violation of, already we would have a violation of wave 1, wave 1 from wave 3, correct?
Exactly. So that's why I'm saying that probably we will continue lower, but there's always possibility to see something more complex. We haven't seen a test of this resistance of a previous wave 4 here. So actually there's still a chance that we'll see maybe a double zigzag here to the upside.
Yes.
But in either case, I think that sooner or later euro dollar, probably by the end of the week, it will be at the new lows. So that's one thing. We have a 3-wave bounce, and the second thing, more important, as I said, we turn down from this trendline resistance, and equality level for wave C minimum requirements are around this level, 100%, which comes in around 1.1050. Okay, so that would be my levels to watch for the next few days. So definitely I'm staying bearish on euro dollar.
You know something, Greg, I don't know if it's in your docket to talk about it, but we have very limited time. I saw you tweet a little bit earlier a comment that had to do with potential strength of the USD against euro and pound in comparison with against the yen, because, and I want to focus on the second part of your thesis there on the tweet, because there are signs of stock market topping. So I bet a lot of friends would want to see what you mean with that.
Actually, we have seen, if I take a look on DAX, we have seen quite aggressive sell-off, and it appears to be an impulsive decline here on 30-minute chart. Okay, so it's obvious that there is some risk of environment coming here. So minimum, I'm expecting a pre-wave setback, okay, and I'm looking for potential decline back to...
This is the DAX. Does the same apply? Do you have an equivalent count for the US stocks indexes as well?
Yes, same view. So here we broke out of this triangle in wave 4. So we reached wave 5 here,
and if I may add, a shallow wave 5, right? I mean, the bounce was quite weak.
Yes, but still,
yes, it still counts. It's a new high, yes.
Yes, but not that bounce. The most important to me is the decline following that bounce.
It's impulsive in short
term. Yes, same as DAX. And also here, I should maybe update this wave count. It's from yesterday. Here on the right, we have NASDAQ, and NASDAQ, as you can see, is lagging a lot compared to S&P 500. S&P 500 has reached a new top here, but NASDAQ, as you can see, is far away from the top. So NASDAQ is having very difficult times regarding bullish continuation.
Are you still missing a wave 5 in NASDAQ?
Yes, I think that we could retest this 61.8%. Just let me...
if I'm right, but you're the Elliott wave specialist, isn't there a valid Elliott wave count that very rarely you can have a wave 5 that does not register a new high?
Yes, that's possible, but I would never make that count unless the price action forced me to do so.
Forces you to do so in retrospect. Yes, I understand what you mean. Yes. Because it's extremely rare.
When you are tracking live analysis, live fifth wave unfolding, there is no way to label wave 5 here because you will be wrong 9 times out of 10.
9 out of times, 10, and maybe
yes, probably 10 times out of 10.
Yeah, 9.9 times out of 10, let's call it, and leave it there.
Yes, so, the only thing is when I would label here wave 5 maybe as a truncated is only if you will see in the next few days a sharp decline, okay?
Yes.
Then maybe I would, but probably even in that case, I would adjust the wave count so that it would have perfect labeling, okay?
Yes.
So I really don't like this labeling where wave 5 doesn't reach new highs or new low. But what I want to highlight here is that, for example, this can be maybe expanding diagonal here. But the point is that I want to make is that here we have a very hard times with the bullish continuation, as I said. So I think this is just a corrective pose on Nasdaq, which means that we will see probably a third leg of decline. Now this confirms very nice situation for DAX and the S&P 500 as well, and especially, as I said, because there is some kind of a divergence between these two markets. So I think that we will see a next leg to the downside, and in such case, Japanese yen will likely maybe see some support, especially against commodity currencies. Aussie yen, for example, if you will take a look there, you will see a very strong decline in the last 48 hours or so. So I think that there is a risk off mode. So definitely, dollar, if will dollar remain stronger, then I would rather look for euro-dollar shorts than dollar-yen longs.
Yeah,
only because of Japanese yen and connection with the stock market.
Makes sense, yes.
But that doesn't mean that dollar-yen cannot bounce. Of course it can, but that's just my approach.
The bull-bear line, the bull-bear line, in my opinion, for USD yen is 112. For me, a daily close above 112 is going to be pretty key for USD yen.
Yes, actually it's higher today. Okay, so that's it for me. We have guest.
Yes,
as I know.
Yes, perfect.
So I will take it over.
Dale, is Joel already here, or Greg can?
Joel's waiting. He's waiting.
Okay, so are you ready?
Okay.
Okay, perfect. Thank you very much, Greg. Okay. Thank you very much, Dale, for having us. Enjoy the interview. I'm going to be listening in.
I didn't know that I had you guys here. I thought you were part of it. But you're welcome for being invited every single day that we do it. All right. Thank you, Grega.
Thank you.
Okay, Joel, I'm going to make you the presenter. We may as well get going, my friend. Looking forward to hearing your voice. It's been at least a year or two since we've done this and seeing your screen. Joel Kruger, Twitter handle @JoelKruger. Anytime you're ready. Hi, Joel. Okay. How are you?
I'm good.
It's great to hear your voice.
It's good to.
It's been a long time, huh? How long's it been since you and I had a conversation?
I think it's been more than 2 years. I think it's been more like. Goodness. Yeah, it's been quite a while.
I didn't have gray hair then, probably. No, I did. But Joel, if you share your screen, do you see the ability to share your screen?
I'm seeing something here, but I'm on a computer that's giving me a little bit of difficulty sharing the screen right now. I'm gonna try and work through it as we're talking, okay. and hopefully I'll be able to figure it out. But why don't we go ahead and just talk a little bit and
okay. All right, Joel. So why don't you, for people, you're a market veteran. You're very well known in the small, big FX world, whatever you want to call it. How did you get started in this business? So what was your background, and who do you blame for getting you involved in trading?
So, I got started in a weird way. I didn't come up with any finance or trading knowledge per se. For me, it was sitting around a table with a father that was a doctor, 2 brothers that were going to go on to medical school, different brains, which is one of the reasons why I wanted to come on today, because I think there's an important message that I want to share for people that are listening in, and something that I've discovered along the way. And I wanted to share that. The reason I sort of found markets was just because I had a bit of an interest I discovered early on in speculation. It really came from at a young age from just being drawn to sports speculation, and from there I gradually made my way into finance and found my way into currencies.
Okay, so you have an important message and something you discovered. Is it a trading methodology, a scenario that you see unfolding? What is it, a method?
Well, it's not a method or a trading strategy or anything like that, you know, and it's much simpler than that, and it's something that I just think is a lot of people, you know, don't take the time to realize. I think that a lot of traders are, you know, they struggle with an ability. They have certain tendencies of, you know, recklessness and emotional swings and disproportionality. And something I discovered a few years back was, you know, how that correlated with ADHD. And I found it to be quite fascinating. I myself have ADHD, and I found that the correlations between the symptoms associated with ADHD and traders that were trying to, you know, get on with it and get through the process were, you know, frighteningly similar. And so the sort of breakthrough.
So until you realize it, and probably a lot of people are ADHD without ever being diagnosed. So would you consider it a major trading issue? Or have you found a way to turn it into an advantage? Because, you know, I'm quad polar, so go ahead.
No. So that's the thing. That's the beauty of it. What I've discovered, and it's been tremendous, is that without knowing it and without understanding that, it's a tremendous disadvantage, because all you do is end up thinking you're cursed or you're hard on yourself. You go through the same cycle over and over again, and you just kind of, you feel like you have a low self-esteem. And but when you recognize that there are certain tendencies that you have for certain reasons, you know, for whatever they are, and you're able to confront those, okay, it gives you a whole new insight. And the beauty of it is, you know, the way I kind of talk about it, I think that everybody in life, you know, you're sort of dealt your cards, and some of those cards are great and some of them aren't, you know. And so if you can figure out, you know, most of the time people spend focusing on their good cards, but if you can instead stop running away from the bad ones and kind of, not bad, but the challenges, and you focus on those, you just put yourself in, it's a game changer. And, you know, the nice things about some of these qualities and tendencies with ADHD are that you do have a sort of a proclivity or a desire to take risk. There's nothing wrong with that. That's a good thing, to be able to sort of have the ability to take risks. The problem is not understanding the recklessness on the other side, and sort of the emotional disproportionality. So, for example, in a lot of people's everyday lives, this happens to me, and you know, you lose your keys, Dale. I'm sure you've lost your keys in the house sometimes. And most people, when they lose their keys, it's frustrating, right? But when I lose my keys, like I'd be tearing the house upside down, like the world just fell apart. And that's just not, I know rationally that that's not the appropriate reaction. But at the same time, you know, there was this feeling of just being overwhelmed and consumed by something that was so meaningless, you know, when you broke it down. And so part of
ADHD is magnification of you're like you're turning anthills into mountains.
Absolutely. So it's just you know, and without recognizing that that's something that's there, you know, and knowing how to deal with it, you know, can be devastating. And so and it can be, you know, obviously tremendously eye-opening if you're able to do that. Now, as an example applied to trading, you know, there's a pattern I've seen over the years with many traders that might sort of be on this path where they kind of start out, they're doing great, and then they just a disaster, right? I believe just a snowball disaster. And I think that goes back to the disproportionality. Everything's going great, they're feeling great, they're doing well, and then sort of one thing goes wrong. And it's just that one little thing that goes wrong, it's nothing, it's fine, it's supposed to happen. And yet there's this reaction where, again, the person is consumed with this feeling of loss and failure, and it's just overwhelming, and it's not proportion to what just happened, and that ends up consuming them and eating away at them, where, you know, it just turns into, you know, increased recklessness, and eventually
they compound. So so the first step is the awareness that this is, you know, this is part of you. The second step is how do you learn to detach from the emotion and, you know, have correct thinking, that it is not the end of the world, that you're just stopped out, that's normal. How did you break through that? What was the epiphany? And I'm sure, we all have paradigms that it takes a lot of practice to create a new one. How did you do it?
So one of the things that I think that a lot of people struggle with that don't know about these issues or the possibility that they might suffer from something is that they have a sort of a lack of faith and confidence in themselves. And because there's just they just feel like they're a little bit lost. If they have success, it's because of some, random event. The epiphany or the realization that I had was once I understood that there was something going on here, I was able to sort of have a more sort of quantified understanding of what's been going on. And it made me all of a sudden feel a little bit more confident and sort of, okay, this is what it is. So this is what's happening. These are the things that I go down this list and they are bang on the money. So now I can all of a sudden feel good about the fact that there's something out there that I can identify with. And that alone, that certainty of being able to identify with something is a tremendous comfort. And that comfort gives you confidence, and that confidence is what gets you sort of in the right direction. You're not going to eliminate or rid yourself of the challenges that you're sort of, I don't believe that anybody can sort of eliminate any of the challenges that they have in life. The trick, I think, is more in terms of understanding that they're there, and being able to confront them and sort of build a little bit of a fence around them, understand them, give them the right attention, right? It's just ironic that people run away from their problems when if you give your problems attention, just like with children, you give them more attention and they respond. So it's just kind of like that.
You're kind of stealing away from my interview on Friday with Louise Nonweller, an Oxford degreed hypnotist who is producing tapes for traders. Let me ask you this.
Yeah.
Have you ever felt, and I'm sure you've noticed it, you've worked with a lot of traders, is that a lot of people don't feel worthy or that they deserve success, so they sabotage good things in their life?
I've certainly felt that, and I can certainly recognize that. And again, I think it goes back to this sort of if we apply this idea of ADHD, the classic symptoms, right, are this recklessness and risk-taking and emotional swings, and these are all things that are very common to somebody that is going to, if this is the cycle and the pattern that you're in, this is the type of pattern that's going to lead to those types of feelings where you just feel like what the heck is going on? It's all kind of, a bit of a mess.
Okay, so I'm getting a lot of reaction from the community. They feel like they're talking to you. Eric says that you're talking to, and a lot of people are saying, why would anyone feel they are not worthy of success? Kamehameha is asking that. I ever hear of a guy named Bob Proctor? Joel?
I certainly have, yes.
Okay, well, he's a big believer in, your paradigm is developed before you're, 5 years old. That before you become a thinker, you're taking in everything, your environment. So that's why, you'll see families hand down emotional issues from generation to generation, and everything, just like trading, is screen time. It takes practice. And do you have any kind of written statements or anything like that that you keep on your desk to remind you?
Yeah, so I want to make an important point there, because she asks a question it's a very good question, and I want her to think about this, okay? When you are wired differently, not sort of in the mainstream way, okay? What happens is when you're wired differently is to get to point B, from point A to point B, you're not able to go that straight A to B route, okay? What happens in your life is you get to B, but you create alternative sort of paths to get yourself to be. And because you do that, it's double-edged, right? You're able to create and sort of create a different way that wasn't there to get to where you need to go. But at the same time, you kind of are left with a feeling of, I didn't do it the right way. And so you feel like you're maybe, you're not being honest with the way that you're doing things, and you're left with this feeling of, you don't have the integrity, or you're not doing things the way. Yeah. So that's kind of why I think people feel in that type of mindset that they're just kind of destined to fail. They don't believe in themselves because they've always kind of found ways to get around it, and maybe they feel that they're cutting corners, and that's not the case. I mean, these are people that have struggled to kind of figure a way to keep up, and that they should be applauded for that. Now, I'm not trying to glorify and say everything's great. Everybody has challenges, but it's just, I think it comes down to that, and I think that's really important. And Dale, as far as like written things and sharing, I want this to be about, I want to come on and talk about this stuff. I don't want this to be about me in any way. I want to share. I have some things about the market that I want to talk about, but I'm not looking to talk about anything else, but just this, and maybe I have a couple of insights on the stock market and on the Fed. But I don't want to get into me.
Blake's saying he can't hear me. I think that, okay. Give me a Y if you guys could hear me. Okay. All right, good. All right, go ahead, Joel. So you want to switch gears? You want to switch gears to the market now? Okay.
Yeah, let's switch gears. But again, I really hope that people, if anybody's listening, the people that are listening, I mean, there are people listening that you really take that to heart, and I think that you'll hope to hopefully give yourself some renewed confidence that you're going to fail along the way, and there's all this other stuff. But let's get to markets, okay? I want to talk about markets because I do believe that there was a significant development. You might have talked about it over the past several days, but that Fed meeting last week was significant and in a big way. And I applaud the Fed for doing what they did. But just to break it down, because I'm sure it's been discussed ad nauseum, the critical thing that happened last week was that we've been in this trend. The Fed has been in this trend since the onset of policy accommodation, at the onset of the crisis, of the key trend there has been to err on the side of accommodation, of policy accommodation. So every single time the Fed has kind of looked to maybe push a little bit towards reversing policy or normalization, or sort of moving in that direction towards what could be tightening or hawkishness, they continuously, right? That trend has been.
We can't do it because the Chinese market's in trouble. There was always a reason not to do it. The economy's really not recovering. There's still slack, and the jobs, the employment report, they always had a reason not to go. So now you believe that that has shifted. We're moving away from accommodation, and do you think they can overshoot with this?
Well, so I think the key is, maybe not that we're moving away from accommodation, and while that could be true, but the key here is that the Fed last week shifted from erring on the side of accommodation to erring on the side of normalization. That's the critical thing, because if you look at last week, there was every single reason for the Fed to backtrack last week. The data was slow. Data came in that day very slow. Inflation still subdued. And all of a sudden, out of nowhere, the Fed is committing to a completely different strategy, where now it's saying, well, we're still moving forward. We're still moving forward. So, we can discuss why if you like, but that is critical. And that changes, I think that changes the game. So
I'm curious, why do you think why?
Well, I think there are a number of reasons. One, I'll give you 4 good reasons. One, and some of them are talked about. One is a cushion for the next crisis. Okay. So if there is a crisis, you need to be able to lower rates, and you
that's what I believe. Okay.
That's 100% credible, I believe. The next is, I think, a very important one that academics or mainstream market hasn't addressed as much. They think it's a bit of a joke, but financial stability, I think, is critical. I think that, yes.
Try and take the air out of some of the bubbles.
Yeah, absolutely. I think that's something that's become more relevant. I think this is a big one. The one I'm going to say right now is a big one. I think that the Fed has this option to go now and continue with normalization while things are good, while they have some good things to point at. Because what happens when things get really bad and inflation finally starts to shoot up, as the Fed believes it will, as it focuses out onto 2019, then all of a sudden you're forced to raise rates when there's nothing to hold on to, and then that's really ugly. So that is another reason. And then the final reason is
Better
just
to do
credibility.
it at S&P 2450 than at 1400.
Absolutely.
Okay.
Absolutely. Yeah. And then credibility, just the Fed needs to get some credibility, and it needs to kind of remove itself from, you know, sort of controlling the entire global economy.
Okay, those are good reasons. What do you think the impact's going to be on the currency complex, buddy?
Okay, so this is another good one. I just want to highlight, we mentioned the S&P. I just want to, for anybody that's listening in, I want to highlight some important levels that we're coming into. If Dale, can I do that, or is
yeah, you can. I'll put the S&P chart up so the crowd will be able to see it.
I'm sorry. Okay.
Go ahead.
So here are the things that you want.
Okay.
Great. Yeah. Okay. So if you pull up a longer term chart, this
is a weekly.
Yeah. So I think if you can go to a monthly, that would be great.
Okay.
Like back to sort of the pre-crisis to crisis lows in 2009, if you can. If not, don't worry about it.
There it is.
Okay, great. Okay, so here are a couple of things. First is June 2017, the month that we're in right now. So if you look at the recovery off of the 2009 low to fresh highs in 2013, it took 51 months. Okay, and if you project those 51 months since that 2013 breakout, I believe it takes us to June 2017, so right where we are now. Now, this is not like, I want to preface this by saying I'm not getting into this wishy-washy, you know, this whole thing on, but the markets move at measured moves and paces, so it's just one thing to sort of focus in on. And these
why
are
51? Levels. Why the number 51, Joe?
No, it's not. It has. You know, we could analyze the number 51, but the point here is that things move in measured. You see measured moves, and we had a major move then, and that major move, if we project that major move to forward, it takes us to June 2017. Okay. So the equivalent type of size. Okay.
Because I interviewed an Astro guy, and he was talking 55 times 55, which is where we are now. In fact, I think it was Monday off the crisis low, and those are Gann numbers.
Yeah. Okay. So you can get into Gann and you can get into Fibonacci, but I'm going to keep it simple. Okay. Then you come to 2464, which we just fell shy of. That's 10% returns on the year, just about somewhere. Let's say 2465. You're looking at 10%. Why is that significant? Because at 10% returns in 2017, where we are, you got to think that there are going to be some buy-siders, some long plays that are going to look to book profits at double-digit returns in the current environment. So that's just another. All these things put together, right? 2467. If you look at a 330-point measured move extension objective following the 2016 breakout. So after the market had seen a 330-point drop from the 2015 high to the 2016 low, that was a 330-point move. If you project that higher, it takes you up to about 2465. 2467 is what the level I had, but roughly in that area. And then the last one is 2485. Okay, well, there's two more. 2485, 910-point measured move extension objective post the 2013 breakout after the market had seen a 910-point drop from the 2007 high to the 2009 low. So that takes us up to 2485. And then just one more small one, you know, we were consolidating earlier this year between 2400 and then we dropped down to 2320. That's an 80-point drop. Projected higher takes us up to 2480. The point being that, that if you take the fundamentals that I talked about, and then you take these levels in the S&P 500. It's very compelling. I'm not saying we're going to stop there, but I'm saying the case is extremely compelling for some form of a top, some form over the near term. I believe it should lead to a significant decline, but at least the case is compelling. One other area fundamentally that I think is critical.
You do believe it will lead to a significant decline, or you don't believe it will?
I do. I do believe. I think that I believe that we will see a 20 to 30% decline. Now, I don't know how fast.
That would take it down to 1,700 is 38% back from those low to high.
Yeah, and it's amazing how I heard years ago when all of this started that there was this strategy to push the market up as high as possible so that when it did fall off even 20 to 30%, we'd still be at levels that were beyond, you know, highs.
Above the 07 high. Still bottoms above, okay.
just two other points to share, and then we can, if you want to touch on FX quickly, but two other points to share that I think, insights that I've had that are interesting. And this is not a political statement that I'm about to make, so I'm not going to be political, but just an analytical statement. When you look at the Obama administration and the monetary policy that was in place over the past several years, you could argue that both of those policies were accommodative. So not only was monetary policy accommodated, but Obama's approach to geopolitics and geopolitical risk, diplomacy, a certain type of policy that was a little bit more accommodative, if you will, if you want to kind of make that comparison, if you want to draw that comparison, not sort of, as willing to sort of react in more active way. Now, when you look at the current administration and where we are currently with monetary policy, they're both kind of more restrictive. So you have monetary policy, which is moving towards this normalization, and you have an administration right now that is unquestionably taking an alternative track to its approach to diplomacy. And so the point being that many people say, well, why have markets been so immune to geopolitical risk over the past several years? Why have they not, they just keep going higher? Well, I think that it lends itself to what I just said, that the policies, both on the political government side and on the monetary policy side, have been so accommodative that they've kind of been a distraction from, or sort of not allowed markets to even want to think about it. It's like, so what that's going on? I'm still going to go higher because the incentive is still there, right? But now, considering with the current administration and where policy is going, that immunity might fade. So it's just something that I think should be, it's food for thought.
Well, the market bottomed 3 months after Obama took office in March. So the market might be topping 5-6 months after Trump took office.
It could
Pretty
be. Listen,
close.
the case is certainly compelling for top. Now, as far as FX and the dollar go, it's interesting. Let's use the euro. Let's use euro dollar as a proxy, and we'll use that as our market that we look at. So for me, I'll give you the technicals and the fundamentals, which we kind of touched on a little bit, the fundamental side. But technically, the euro right now is trading. If you pull that up, thanks, Dale. If you pull that up, we're trading, in this area right now around 111.40. We got up towards 113. We stalled out, but you have the perfect chart up, because if you look at this chart that goes back a little bit more medium to longer term, we're not really going anywhere. We've been in an uptrend in 2017, but we're coming up into this critical resistance area, I'd say between 114 and 117, where then it gets interesting. So my approach to this right now is, we still could head higher a little bit here, and that might mean the market doesn't buy the Fed and it kind of continues to focus on U.S. protectionism and all that. But once we get up to the 114 to 117 area, it becomes highly compelling. Now, if we break down in the short term here below 111.10, that just sets up a short-term correction that would project a measured move to 109.25. That's kind of where because if you look at the 111.10 low and you take that up to the whatever high we got up to, just shy of 113, and then you take that move and you extend it downwards, I think it takes us down to about 109.25, which would be an ideal level to be buying the euro, for a higher low and continuation. So, but on a sort of a more sort of macro fundamental view, I kind of am not ruling out, I don't want to rule out, and this is a little bit, I guess, contrarian, but I still think the dollar has a big run ahead. So I'm not sure if it happens now. I can certainly see the euro pushing up a little bit more, but I still think the dollar has a big run, because when you couple the Fed policy outlook and this shifting strategy that seems to be focused on moving forward with the possibility of looming risk-off price action, the lure of the dollar on the safe haven bid and the yield differentials, I think easily offset any protectionist U.S. administration policy that's already riddled with, a lot of obstacles. So I still think the dollar has a nice run ahead of it, and that's not the I guess a lot of the people on my side and on the buy side, they've been very dollar bearish. Now, of course, if the facts change, then I will change, but I'm still holding on. I see no reason when you look at that euro chart to be getting aggressively bearish the dollar.
Okay, interesting. The most confusing one for me is, well, your belief is if we get this 10, 20, 30% correction some millennium in the S&P, that the dollar is going to be a beneficiary for risk off. What about the yen? Because yen's risk on, risk off. Any view on that?
Well, yeah, I mean, I have a view. I don't know that it's going to give anybody any trading ideas. You make a very good point. I would say the two currencies that are interesting in that type of environment, I think one that's going to be even more interesting that everybody's forgotten about is the Swiss franc. I think the SNB has a major, nobody's talking about it. It's kind of under the radar because it's not really moving, but it has potentially a huge headache on its hands if we see this massive risk liquidation, because the SNB they're not going to be able to fight against that capitulation if it sort of plays out that way. And so they have a huge headache. So you mentioned the yen. It's the same kind of thing with, you know, there's those diverging two-way flows in that type of an environment where you have risk off, which is kind of traditionally yen supportive, but at the same time you have yields that are dollar supportive. My view of that is that ultimately, you know, the dollar yen would move ultimately higher. So I would view, because I've never viewed the yen as a safe haven currency. I've always viewed it as one of those like kind of currencies that people say is a safe haven because it has the ability to benefit in flight to safety environments. But the reality is the yen is just a funding currency that, because it's a funding currency, traditionally benefits from risk off flow. But it's not I wouldn't say the Japanese economy and Japan is a safe haven economy.
Yeah,
I think that's another sort
point.
of misconception.
Yeah, great point. That's a pearl. What a great interview, Joel.
Thanks.
This interview was, you know, I don't completely recall our first conversation, but this was outstanding because, you know, trading, like real estate's location, trading psychology, and, you know, you came in like an open book and talked about, you know, your ADHD, and then you broke down some great fundamentals and technical areas in the markets to edify our community. I want to thank you, my trading warrior brother, Joel Kruger, for hanging out in face today with us and making us wiser.
Thank you, Dale. I'm glad to see you're still at it. It's been a pleasure to be on. I'm glad to see you're feeling good, and you know, we'll see you guys in the future. But yeah, thanks for having me on, and thanks for letting me get that message out there.
Okay, Joel, I know your Twitter handle. You want to give out your website address for people, because Joel is a must-follow at Joel Kruger, just like his name. What's the website address, Joel?
You know, my site is JK on FX, but Dale, honestly, it's really not necessary. This is just about sharing, you know, what I've learned, and I appreciate that, Dale. I really do. Thank you very much.
All right, my trading warrior brother, Joel Kruger. Thank you very much for sharing a look into our minds and a look into the future with what could happen, and underscoring what the Fed is doing and giving us some ideas on a few different asset classes. Good hunting, my buddy. Talk to you again soon, all right?
Yeah, take care, Dale. Thanks.
All right, buddy. There you go, guys. What a great interview. So good luck the rest of the day, and we'll be back with you tomorrow. I have a couple of guests for the remainder of the week. I want to thank Steve Volge. Thank you, Kevin. I want to thank Greg Horvat for dropping by today. Of course, as always, thank Blake for his looks and his views, and really think that we have the best webinar on the net to really get the full picture of what this team is doing and all the hard work they're doing. I recommend, besides going to a psychiatrist or psychologist to find out how crazy you are, one thing that wouldn't be crazy is spending $1 for a trial subscription at ForexAnalytix. All right? So take it easy, everyone. See you, Diego. Adios. And most of all, remember, don't just count your pips, count your blessings. Adios.